Hi and welcome to this video brought to you by 𝖢𝖥𝖣yi. Today I'm going to be discussing the potential opportunity that could be forming on the US dollar Swiss franc pair. There are strong fundamental, seasonal and technical reasons backing this market to potentially remain bullish, and in this video I'll break it all down for you. First, let's take a look at the fundamentals. Now, the Swiss National Bank, or SNB, is on an aggressive rate cutting cycle, and there have been talks about bringing interest rates back into negative territory for the first time since May of 2022. Now, why is that? Well, inflation in Switzerland has dropped to just 0.6%, and that brings a risk of deflation which will loom over that economy. That means that the Swiss National Bank could keep cutting rates to stimulate growth. And on the other hand, you've got the Federal Reserve, who is holding interest rates higher, potentially keeping them at 4.5% for an extended period. Why? Concerns over potential inflation pressures from Trump's proposed tariffs, lower unemployment and stronger inflation expectations mean the Fed could remain fairly hawkish. Now, this could create a significant interest rate differential between the US and Switzerland, making dollar Swiss a very interesting market for me. So let's now compare GDP growth rates. The US economy has shown resilience with stronger growth prospects, while Switzerland's economy has lagged behind, and this further supports the idea of US dollar strength against the Swiss franc. Now, when you pair an expanding economy with a central bank that's keeping rates elevated, you get a currency that is fundamentally positioned to rise. Now, historically, data provides another key piece of confluence. Post-election years have historically favoured the US dollar Swiss rally. The seasonal data shows that dollar Swiss typically forms a low on February 1st and then trends upward until April 1st. The probability of this move playing out is 83.33% with an average return of 2.82%. That's a compelling seasonal trend that aligns with our fundamental outlook. Now let's bring it to the charts. Looking at dollar Swiss weekly chart, I can see a strong bullish trend. Right now, the price is testing key support levels at 0.9, and if that was to hold, I feel that the bullish momentum could continue. Historically, when price sustains above this level, we tend to see an extended rally. Now, as a caveat, as I'm filming this, we have an upcoming FOMC decision, which would have concluded by the time you're watching this video. The market is actually expecting the Fed to hold rates steady at 4.5%. However, what's really important is Jerome Powell's tone. If he signals that there is a need to keep rates higher for longer, or expresses concerns about persistent inflation, then the US dollar could rally even further, adding confluence to dollar Swiss long opportunities. So, to summarise, we have a dovish Swiss bank versus a relatively hawkish Federal Reserve, creating a favourable interest rate differential, stronger economic growth in the US compared to Switzerland, a high probability seasonal pattern that supports dollar Swiss upside, and technical support of 0.9 aligning with my bullish outlook. So potential bullish catalysts from that upcoming FOMC meeting could then add extra fuel to the fire. So what do you think? Let me know your thoughts in the comments below. Do you agree with this analysis? And if you found this video helpful, don't forget to hit that like button, subscribe to the channel, turn on that notification bell so you don't miss any future trading insights. Remember, trading on margin is high risk. Please do your own research before making any trading decisions. Thank you, and I'll see you in the next one.